All right, break time's over. Back to work tonight, guys. Tuesday evening, getting ready for Wednesday's trading session. Not your average Wednesday, though. Got the biggest news of the week coming tomorrow. Got possibly a record-breaking inflation number coming tomorrow morning. I'm going to cover all my favorite trades in tonight's video that will you have a game plan to make some money on Inflation Wednesday. Got a lot we're going to cover here tonight on this video lesson. Before we jump in and get this party going tonight, as always, make sure you subscribe to our YouTube channel. I don't want you to miss tomorrow night's video. And if you guys enjoyed the video tonight, help me out. Hit that like button for me. I appreciate you guys supporting this YouTube channel. But enough of the intro, right? Wednesday is right around the corner. Biggest news of the week. It could be a very wacky Wednesday tomorrow. And no matter which market you are trading, well, right now, everything is relatively bearish, as you guys probably saw, right? Bear moved down on the Nasdaq. Bear moved down on the S&P. And for the most part, a bear moved down here on the crude oil. Now, you'll notice, though, we get some ranges right now on the Nasdaq and the S&P, and those are some pendulum swings rotating off the low here. We know there will be some selling opportunities here on that next pullback, but I'll tell you right now, these types of pendulum swings, they love to squeeze. They love to squeeze. So we definitely have some great chances here to sell up around these highs above the trading range, but I got my eyes on some slingshot, some pendulum swing reversals as we go higher. I also think there's a bunch of bear traps down here below those lows. So we'll definitely keep track of both the sell side and the buy side here for tomorrow. Get a lot we're going to cover on the Nasdaq and the S&P. Over on oil, oil is probably the most difficult of all of the markets here tonight. Get a strong move down there for the bears. I would love to get some bear traps down around that 89 level back up. And I also think too there could be a nice strong run going back up to that 93, 94, and 95. We are overall bearish right now on oil, so I will be watching for breakouts going down to $85 a barrel. We'll talk about what we need to get for that breakout to be possible tomorrow, because right now it doesn't look as easy as we might want it to be. So we're going to cover those bases on the oil. I'll cover the buy side, we'll cover the sell side, and most importantly, we'll talk about when to sit on hands, because we do have some of the big news coming for tomorrow. Speaking of tomorrow, not a lot on the schedule tomorrow outside of that, what could be another record-breaking CPI report tomorrow. The big news tomorrow is that 8:30 CPI report. Now, this time last month CPI report was what? 9.1, 9.2. Now, we talked about how good news is bad news last week. Last Friday was the non-farm payroll number. And when it came to the non-farm payroll number, we talked about how good news will be bad news. And that was kind of what happened and played out last Friday. This will not be the case. This will be bad news is bad news, because as you can imagine, if we see another elevated, or if we see a higher than expected CPI report tomorrow, we do expect markets to interpret that as being a higher likelihood the Fed will continue to aggressively raise rates, which will likely be a bearish problem for the market. So you would think, now keep in mind, we're going to trade what we see tomorrow. I have no desire to trade the news. I will trade the reaction to that news. But it is easy to think that if we get a higher than expected number tomorrow, even if it's not that much higher than expected, that may lead to some very bearish reaction because of the domino effect that we have with the Fed. My best advice to you and all of our students and myself tomorrow in our trade room, because we'll be trading this stuff tomorrow morning at 8:30 Eastern time, is not to get wrapped up in the news report. Just wait for the news to come out, give it 5 or 10 minutes, and we'll trade the reaction tomorrow after 8:40, 8:45 into the opening bell tomorrow. So a lot of the stuff we'll do tonight will very much depend on how the market reacts to that tomorrow morning. Later on in the morning, of course, with the weekly inventory report. That really is small potatoes when it comes to comparing to the CPI report, but that is a secondary number coming out here for tomorrow. We're going to keep listening in for Fed speak right now. We're going to keep listening in for any new developments out of the whole energy situation happening in Russia. We heard headlines last night or early this morning about a pipeline that went down coming out of Russia, and boy, did that send things really whipping around in the oil market. So we're going to keep listening in for Fed speakers. We're going to keep listening in to see if the situation in Taiwan and China elevates to anything, and we're going to keep watching any headlines coming out of Russia as well. There's a lot of those kind of known unknowns, those geopolitical issues that could surprise us here for tomorrow. But make no mistake, the big news tomorrow morning in our trade room is that 8:30 CPI report. Now, back to our charts. We're trading the chart tomorrow, right? We're not trading the news. We're not trading what we think. We're trading what we see. Now, whether you trade one of these markets or you trade all of these charts, make sure you watch all the way to the end tonight, because I'm going to keep things moving and you'll learn something new throughout the entire video lesson. I'll provide different trade ideas, different advanced tactics as we go deeper into this video, and I'll give you a reason to stick around all the way to the end. So grab some notes, take some screenshots. You're going to love tonight's lesson. NASDAQ, S&P, and crude oil. Why don't we grab the NASDAQ first? Keep in mind, though, the NASDAQ and the S&P are very, very similar, and most of what we talk about on the NASDAQ can be applied to the S&P and vice versa. This, of course, is a 4,000 tick chart. 4,000 tick chart on the NASDAQ. I have students trading the micros as well, the micro NASDAQ, the micro S&P, or the QQQs, or the SPYs. This really applies to everything related to those stock indexes. So there are four basic insights, four key insights that are helping us figure out where the best trades will be for tomorrow. The first one is the overall bull bias. Now, I get it. We are long-term bearish, but I am not a long-term trader. I am a short-term trader. If you're looking for long-term analysis, I'm sorry, but that's not what I do. So right now, look at a 4-hour chart. Look at an hourly chart. All right, the medium term right now is a bullish bias. Now, bull bias, right? What does that tell us? We're probably going to see some of the best trades this week will be to the long side. Now, that's about where it stops, though, because you'll notice the second key insight is a pretty strong bear momentum, right? The bears picked up right where we left off yesterday and ran this market lower. What that really tells me is that until we start seeing something change, I want to focus on the sell side right now with that bear momentum. Third key insight here is that strong move down. Whenever we see a strong move in one direction, we expect there to be a relatively deep pullback and a retest of that level. Why is that important? Well, because whenever we have a strong move like this, we always kind of think of it as unfinished business until they go back and retest that low. Once they retest that low, now there's no more mission to accomplish. There's no open loop that's left open right now. Now the buyers have everything they need to make that reversal going up off of that low. Anytime we see a strong move in one direction, we expect to get a retest of that level. Once we get a retest, then from there, do we bounce up and reverse, which looks possible here right now, or do we see it run through that low and take out a breakout going lower? That is a very important part of this, because it definitely does leave the door wide open now for buyers to take this thing higher. And then speaking of buyers, we have a range. And most importantly, ranges love to rotate. They rotate up, down, and now as they rotate higher. Now, as I mentioned before, there is plenty of bearish overall momentum right now. You can easily see there could be trend lines up here, swing levels up here. That prior low from yesterday, that is also a level of resistance. So do not get me wrong. There are plenty of bears, I would assume, that are waiting to short this thing back down to retest that low. However, if the bears get in trouble, this is where those slingshot, those short squeezes can really become a very good trade. One of my favorite trades, right? Because you have all of this wide open space, and these love to just keep on grinding and running higher. They can lead to some very, very big profit targets for you as we go back up to retest those highs. So knowing that is the case right now, knowing these key components here, let's think about if this market continues this rotation going higher. The one thing the sellers have to be careful with this, because again, it is still a bear market at this point, but you'll notice there's a trend line coming up right underneath this, underneath these lows right now. So I get it. There's resistance here. There's resistance there. There's resistance everywhere here. It's very easy to find resistance. The problem we're going to have, though, is for me to want to be a seller, I can't do a very good job at getting short into that trend line. The sellers have to get underneath that trend line and use that trend line basically as their key entry point going lower. Now, most of the time, what this will look like is it'll look like something like this, where they'll try to take it higher, right? The buyers will try to take it higher. And normally, I would look to sell into their stop losses with what I call a failure pattern. And this is a very typical way I trade ranges. I find resistance overhead. I like to get the buyers kind of roped in, right? They pop it up. The buyers are trying, right? The buyers are trading what they think, not what they see. They're getting a little bit ahead of themselves. And if I get those buyers trapped in, I will usually like to sell right into those stop losses. But again, it doesn't work that way in this particular situation. So instead, I've got to wait for that sell to trigger and then use that trend line on the opposite side, right? Basically, this is a failure setup with a delayed entry, right? It's an entry off of the underbelly of that trend line. Now, where's the target on this one? I always take some profit off at the other side of that trading range. And then I like the retest of that low, right, for a second target. Leave a runner if you'd like to here, because there's a big range underneath us here, down to that 12,920 and that 12,851. We'll talk about the move lower here in just a moment. So that is not the easiest of sell setups to get short as we go higher. What I would really love is I would love to get that nice strong blast going higher. Short squeeze, strong move, shallow pullback, higher high in price, traps, baby. One of my favorite trades in a short squeeze environment, right? The bears are stuck short. They scramble. They of course cover their short positions. They buy their way out. The market kind of slingshots and runs higher. Nobody can get in on that shallow pullback. The higher high confirms it's not just a V top and back down, and everybody will pile in on what I call a two-try trap. That's one of them. Another one of my favorites, whenever we have these slingshot kind of short squeezes, is that pop and that grind. We see these all the time. We saw one this morning. Pop, grind, right? What do we do in a pop and grind? We draw a trend line off that low. We bring it up around that high, and we sell that first test. We talked about this repeatedly in last night's video. If we pop up and we start to grind and go higher here, make no mistake, draw that trend line right off those highs, bring it right down to that big low, right? I know it seems kind of weird to draw it like that, but don't you worry. Find those prior swings, and you want to get underneath one of those prior swings here. That'll get you underneath the moving average, and we can go trap below prior swing. We can go failure pattern below the moving average, and then a pullback pattern set up off of the EMA, right? That is a trap, a failure, and a pullback. I don't care what entry pattern I get. I just want to make sure I'm getting that first test off the low of that channel. So any of the entry patterns we talk about in our free trading course, which reminds me, I know that most of you guys and gals have taken the free classes. You've learned all the setups. You know the basic rules. You're trading them, making money on your own with them. But listen, if you're one of the few folks watching right now who haven't taken that free trading course to learn all the entry tactics I'm talking about here tonight, what I'll do is I'll put a little link up here for you in the upper right hand corner for all of our free trading courses here at School of Trade. If you're like me and you hate missing the best trades each day, or you're taking too many losses, the strategy I teach in that free class will get you into far more winning trades, help you avoid a bunch of losses, and most importantly, give you a ton of confidence as you trade on your own each day. It'll also get you ready for trading with me as a member of our trade room. It's a great video class, a great strategy to transition into full-time trading. So grab that link that popped up there. Your P&L can thank me later. And let me know how you do with it. Send me an email. Let me know how it goes for you, because I would love to hear. I get so many great emails from you guys about how you're making money with that free course. So as we pop up, we get a couple options there. Another one too would be, as we take off, if we start to jump off of that moving average now, I can draw a trend line off of that high, trend line, find that channel, right? Grab that prior swing. I always love traps. Traps are my favorite out of all the setups because they're, nothing's ever guaranteed, but when you do them the right way, they're really, really very reliable. And so trap, failure, pullback. Now, again, with this reversal, where do the buyers want to go? The buyers are going to want to go up and take out those highs, right? They want to go up and take out those highs. And then remember, as we've talked about quite a bit on these videos last few weeks, we're seeing a lot of these big reversals. And then once we get up around these highs now, all of a sudden now the buyers come in way too late. They try once, they try twice. Think about now wrapping in or roping in those buyers that are getting in way too late to this move and then using their stops. The easiest money you're ever going to make in trading is when you're, for example, getting short and buyers are foolishly buying into where professionals are taking their profit, right? So once those buyers get long up there, let them try twice because momentum at that point will be very, very bullish. But once those buyers try a couple times, their stops are just gasoline for that move going lower. So sell right into those stops with a 2-try failure. And then as we drop lower, remember your job is getting started now, find that new channel off that low, mark off that high, and then repeat after me. First test is the best test, right? First test is the best test. It's a 2-try failure, selling into stops off the high, and then of course it could be a trap, it could be a failure, it could be a pullback setup. Now, where do you think the market wants to go at that point? Where does it want to go? It'll want to go back and take out some of these levels here for sure, but it definitely wants to go back into that trading range. If we get that reversal, I mean, think about it, right? This could easily set things up for a slingshot or a short squeeze going higher, right? Make your money going higher. And then as we begin to exhaust at those highs, we roll over, right, and back down to that 13,000. So we're going to watch that closely here for tomorrow. They may also keep it going, right? They may also, we may all get that squeeze, and it may keep on going from there. There's quite a wide open space, but that'll be something we'll talk about tomorrow in our trade room. So now we get a pretty good idea of what to do if the market goes higher here right now. What if we go lower? Can I buy off that low? Can I sell that breakdown? That's a good question. Why don't we answer that question on the S&P? Once again, the S&P and the Nasdaq are very, very similar here right now. So everything I say on the S&P can pretty much be vice versa on the Nasdaq. Real quickly here on the E-mini, you can see there are basically 3 of the same components right now. First of all, on the S&P, we are again medium term. Yeah, long term bear market, sure. I'm not a long-term trader. 4-hour chart, 60-minute chart, right? We get a lot of bullish momentum right now. We have a bull bias, but we are overall bearish into a trading range, right? That trading range, as we rotate off the low, again, we're very bearish right now. There's plenty of resistance. But again, like I mentioned earlier, that trend line requires us to get underneath and sell it back down again. If not, we're going to get that 1, 2, 3 break higher, find that channel and buy off that channel, or we're going to get that strong move, shallow pullback, higher high in price. And what do we always say? Traps, baby, right? That is one of my favorites, or that pop and that grind going higher, which is one of the easiest ones to trade there, right? So we know where that's trying to go. A lot of that, all of that is basically the exact same thing, including, by the way, that reversal back down that we mentioned there on the Nasdaq. Now, as we go lower on the S&P and the Nasdaq, you got to think a lot of bear traps down here, especially on the S&P. Look at a 4-hour chart. On a 4-hour chart right now on the E-mini, you're going to see this pattern right here. On a 4-hour chart, you're going to see this pattern right here. It may not be exactly like this, but it's very similar, right? And that level, 41.03 3/4, is right there. I can't think of any better place, and again, on a 4-hour, right, kind of a medium-term direction, there will likely be a lot of buyers waiting right below. Again, that level right there is this level right there. All right, we're not quite there yet. So as we go lower, I would love to get a reversal off of that low, right? There's a range above us. Ranges love to act like magnets, right? So that's probably the one big difference right now between the NASDAQ and the S&P. The S&P is a beautiful trap level there at 4103, whereas the NASDAQ, not so much. Right? NASDAQ, probably not as much, right? There's quite a bit of wide open space down the NASDAQ, right? NASDAQ could easily break out, which we'll cover in a moment, down to that 12,814, 12,814 and 3/4. That's our next big level as we go lower on the NASDAQ. Let's get back to the S&P though right now. The S&P, of course, as we go lower. Okay, first of all, how would I buy it? If I like the idea of that reversal, how would I buy it as it goes back up into that trading range? Well, it really all depends on the strength of the breakout, right? That's what it's always about. Momentum will tell you how aggressive or how patient you have to be whenever you're trying to trade reversal. So for example, right? Let's say, for example, the market punches up and then slams back down, like real strong move down, right? The bears come in, they're like, got you, sucker, and they run this thing lower, right? If this thing pumps, and then dumps back down, that's a lot of momentum, okay? When I see something like that, if we go, if we pop and then drop like that, okay, what you really want to do is you want to anticipate a retest of that low and then look for that long back up. Because again, anytime we see a strong move in one direction, we expect there'll be bears right there and they're going to want to retest. Once those bears get that retest, then the money gets so much easier, right? It's so much easier to get that reversal from there. So here's kind of two scenarios, right? We pop up and we dump back down. Before we get the retest, this is where a crown reversal comes into play, right? What's a crown reversal? It's a 2-try failure with a trap, okay? So again, in this scenario right now, it's gone up and then slams back, or it just slams lower, right? The momentum assumed on this, it's a very strong move down, okay? That's the reason why we have to be very careful. Let them try once, let them try twice. Now remember, at this point, I have to buy as low as I possibly can on this reversal. Why? Why is it really important for me to buy as low as possible? Well, because think about it. There's probably going to be a channel coming down off that level. So if I try to buy as it's going higher, I'm walking right into a buzzsaw and there'll be more bears right there. Does that make sense? So when we get a really strong move here, you've got to anticipate that as it goes higher, there's what? There's more bears coming in right here to punish us for getting too aggressive. Okay, this is why you can't force those by buying too high when it's a very strong move down. What happens is, though, if you get a real strong move down and you can get that trap, the trap now puts you in a position where you're getting in a really safe location because the sellers are not going to sell down there, right? They're selling up here. And by the time we get back, up, right? By the time this thing runs back higher now, you're already cashing a paycheck, right? You've already got your stop to point of entry. You've already got money out of that trade. And at that point, bring it. Sure, come on back down again if you want. A lot of times, though, they won't, and they'll keep on running higher. Okay, that's a really, really valuable thing that you got to keep in mind here for tomorrow. Hopefully that is a big light bulb moment for you. It was for me when I first learned it. Seems like a lifetime ago. So strong move down. Look for that crown reversal with that trap. Okay, now the other option is we pump up, we dump back down. The bears come in, they sell, and they retest. Okay, mission accomplished. Now we can get a lot more aggressive. Now we don't have to worry about bears coming back in until we get back above that level. Make sense? So now what we want to do is let those bears come in and try once, let them try twice. What I'll do is I'll draw a trend line off that high, I'll bring it down off that low. I try to use the 2-try rule because now what that does is it gives me some stops to run. Remember, the easiest money you're going to make is when you're getting, in this case, long, and the weak hands, because these are the weak hands down here, right? The professionals are selling high. We're not trying to sell low, right? So once the dumb money, the rookies in the market, Once they sell right into that low, their stops become easy fuel for this. And now I can go out and trade the turn on this. So imagine now we get that 2-try failure into that low. Stops are sitting right there. And now we get that jump running higher. Okay, so there is your 2-try failure. We don't need the trap at that point because we already have that retest. Next up here, draw a trend line off that high. Bring it down off of that low, and you got it. First test is the best test right there. I want that long failure trap pattern, pullback pattern off of that low. Where does this market want to go? It wants to take out these highs. So leave a runner. It will be worth it for you. Leave a runner. It'll be worth it back up to the opposite side of it, right? So that's the scenario if it really punches and goes lower. Now, if all we do is take out that low, probably not going to be that big of a deal, right? At this point now, it's that 1, it's that 2, stops getting hit and back up. Makes sense? Right? I don't have to be that patient. I mean, I do because, again, we're very bearish right now. But if we simply take out that low, right? Every time we've taken out these lows, it's bounced right back up again. So let's assume now, right, we just barely take out that low. The weekends come in, right? The bears try once. Now, don't get me wrong. If I can get a trap on that, even better, right? Even better. That's fantastic. But if we don't, right, it's not going to be a deal killer on this one. Make sure, of course, right, make sure trend line coming down. So we don't want to be buying into that trend line. But again, think about those bears now coming in, trying a few times. Use their stops. That's the key. That's where the easiest money is, in my experience, in day trading. And then use those stops as fuel for that move back up, right, to retest those highs here. Those are some scenarios I'm watching as we make that move going lower. And then as we run lower here, how would I trade a breakout? Well, there are really three types of breakouts here. One of them would be a very strong move down, a shallow pullback, a lower low in price, and a trap. Okay, this is, again, requires a ton of strength, right? It's got to be a very strong move going lower, right? It's got to be so strong, it creates a sense of urgency so traders are willing to sell relatively low. Okay, so strong move, shallow pullback, lower low in price, right? The key is that lower low in price, because if we run lower and it goes higher low in price, that's not it, right? Now that's a 2-try failure. Make sense? Right? The lower low in price is what determines that is the trap now. Hope that makes sense. So next one would be we take out that low. We pull back to the moving average. We blast off that moving average, right? Like really blast off that moving average. Mark that low, mark that high, find those prior swings and grab that first test, right? Again, I say first test. I like traps. I like failures. I like pullbacks. I have literally hundreds of examples of how we apply those setups to markets like this one, all included in that free trading class on the website. So log into your free course membership on the website and you'll see a big database of trade examples. Very, very good stuff there for you. And then one of the most common in these summertime markets is that pop and grind. Right? Summertime markets are a bit slower other times of the year. Great time to start your trading in the summer because it gets you prepared mentally for the fall season, which comes the second week of September. Draw that trend line off that low, up around that high, and you got it. Mark that high, mark that high. I'd like to get above those prior swings because that's where traps live. I'd like to get above the moving average because that's where smart failures set up, right? And we like to use that first pullback off of the moving average, right? Traps, failures there above the moving average, and that pullback from there. Where does the market want to go in these breakout scenarios? Remember this, trends love to move in threes, and they love to go first leg, symmetrical to third leg. The second leg is oftentimes either a little bit smaller or a little bit larger, right? That's one of the more complicated parts about trends. The key is, though, is once you know the first leg, like in this example, first leg, it's very easy once you get that relatively deep pullback to anchor the size of that first leg, and that will give you a more refined exit as we go lower. Hopefully that makes sense. Now, if this thing really kicks off and runs lower, we get a lot of open space down there, 40, 80 half. And with a number like we're getting tomorrow with that CPI report tomorrow, you have to think that anything is possible, right? I mean, this thing, if you recall from last month's CPI report was one of the biggest reactions I think I've ever seen. I mean, I've seen some pretty crazy moves after FOMC or non-farm payrolls, but that was one of the most insane reactions we've seen I can't think of the last time I saw some move that much, that fast. So be aware, there may be some very, very wild reactions tomorrow. But again, we're not trading the news. We're waiting for the reaction to come out, and we'll trade the reaction. So be aware, right? A lot of what we're talking about here tonight may have to be adjusted, right? That report tomorrow may really blast these things out of the water here, and we may have to readjust tomorrow in our trade room. But that's okay. That's why we have our trade room, right? We'll be there together tomorrow morning. All the students will do it together, and we'll reset, and we'll go from there. Back to our oil now. Finishing up here on the oil. Tomorrow is definitely going to be potentially a difficult day for oil. We got the inventory report tomorrow at 10:30. We have, of course, that CPI report at 8:30. And we continue to get these little grenades going off right now in this market about, tit for tat, back and forth, because, Russia kind of has Europe kind of held hostage, right, because of their energy needs. And so we have this kind of back and forth right now with oil, very jumpy. If I had to guess tomorrow, I would guess tomorrow might be a bit of a difficult day, but I try to go in every single day with that kind of attitude of let's just take whatever the market gives us. Usually, though, Wednesdays are more of a challenging day on oil, and when you apply the CPI report tomorrow as well, it definitely kicks that up a couple notches. But again, don't let my comments here tonight make it sound like, I shouldn't even try to trade oil, because we'll take trades if we see good setups. We don't know what we're going to get yet. We'll trade what we get tomorrow. Come in every day, nice open mind, and take what the market gives you. There are 4 key insights, though, here on crude oil here tonight. One, of course, is a bear bias. Again, look at a 4-hour chart, look at an hourly chart, right? You'll see bear bias in the medium term, not the long term, right? Well, we're a little more bearish in the long term, I guess now, but we're bear bias here for my purposes. Next up is bear momentum. Anytime we see a strong move in one direction, right, we know that's going to give us a potential retest of that low. So we get bear momentum and a strong move down there, right, for the bears. This definitely gives us the respect for those sellers. One thing that really stands out, though, on this chart, and you can definitely tell this is probably because of tomorrow's CPI report / inventory report, is we literally finished right in the middle of this range here today. Simply look at the chart, right? We're pretty much right in the middle, maybe a little bit below the middle of that range right now. What does that tell you? It tells you this market is clearly either waiting on something or is very unclear as far as what direction they want to be going in. So I would say there's potential for probably anything at this point here on this oil. So let's go with what we know right now. What I know right now is we had a bull market up into a trading range, and that blast running lower. That blast running lower says the bears have control momentum. They're going to want to retest that low. Now, once they retest that low, do they blast through that low down to, I would assume, 85? Do they head fake at that low and snap back up, which I love that idea, by the way, right? That's an option there. Or does this move lower? Does it V bottom? Because, this range, of course, is a magnet. They're always magnets. I really like the idea, if we go higher here right now, for a little tiny trap right there. I really like that trade right there for the long side here, right? So if we do try to go higher, I like that trap, right? I like that trap. Strong move up, shallow pullback, higher high in price. That trap seems to be a worthy opportunity for us here as we try to take out those highs. The one thing you'll notice about this is the sellers don't really have a lot of options right now. As we go lower, the bears really have to show us they want this because there's a lot of support down here, right? This could easily backfire right back up into that trading range. Okay, as we go higher, am I really going to try to sell up here with all of that bullish momentum? No, I mean, I can, but this is one of those scenarios where if we get a run here in the pre-market or tomorrow morning, right, if it runs higher like this is a freight train, right? I can't just sell because it's resistance. What I have to do is either wait for a crown reversal to sell off that high. We mentioned this earlier on. Or I have to wait for the pullback, the double top, and then get that short, right, going back down. Again, possible, doesn't seem likely right now because that's a lot of momentum, right? The buyers would love to get this thing and blast this thing. We've got that 95, 94 range above us, right? 95 is another big round number. So as you can see, the sellers, again, we're overall bearish. We are fundamentally bearish right now, technically bearish right now, but it ain't easy right now, kids, to find a good spot to be a seller. So let's talk about this. A lot of this will be building on we've talked about here so far. Strong move down, we get that retest. What do we always say? Mission accomplished. Okay, this could be here, it could be here, it could be here. This whole area is a bear trap area here. Let those bears now come in. Let them try once. Let them try twice. Light those stops up, right? Use those stops as fuel, if you will, and run this thing back up into that trading range. As it rotates higher, find that new channel off the high, off of that low, and whatever you do, do not miss that first test. Again, these are very, very powerful. A lot of traders out there, they won't take the reversal. You know, they're not quite confident yet in that reversal. That's perfectly fine. That will come with experience. But once you get it to turn over like this, the technique of drawing that channel off of the highs is very learnable in a very short period of time. And so finding that trap, that pullback combo, really like those trades coming off of that low. And we pretty much know exactly where this thing wants to go, right? It wants to take out those highs at 92. Now, as we go lower, maybe they take out that low, right? Maybe they hold that pullback and they jump off of that moving average and blast running lower. That's pretty easy too. Just mark off that low, mark off that high, and obviously these could be pretty steep, right? This could be a move lower. It may pull, right? It may pull back and then really blast like that, right? I want to keep it as simple as I can here. But once we get that 1, 2, 3 and that jump off the moving average, that's the key. I can't sell that first pullback, guys. I can't sell it. Again, we're at support, right? With a range above us. I can't do that. It's not a very high, it's not a reliable trade, right? The odds aren't good enough. I have to wait for that blast because once we get that blast, then we know we've broken out of the range. We know those bears now want more because anytime we see a strong move in one direction, we know the odds now are in our favor. And again, look for that first test off the high of that channel. Again, first leg, right? And then anchor there, third leg. Okay, where would you think the bears want to get to at this point? 87.01 to be specific, 87.01. Okay, watch out for that pop and that grind going lower, right? Mark off that low, mark off that high, you got it, and sell that first test with any of the entry patterns I talk about in that free trading course. Keep an eye on that breakout going lower. As we go higher, I mentioned this earlier on. I really like the idea of this one right here. Mark off a trend line off that high, off that low, and look for that trap below that low, right? I like that trade a lot because, again, it feels like it's basically one big trading range. And it will probably try to rotate back and forth here. If I can get into something on the way higher, right, like a like a little hidden channel with a trap, right? This would really be a nice entry here as we go higher. Again, kind of thinking this might be one big range, and they may simply try to rotate back and forth here. Okay, so keep an eye on this as it goes higher. If I can get a trap, I think a trap is going to be really critical on this because you don't want to buy too high. You want to buy as low as you can as we go higher here. Now, again, if we find ourselves up inside these highs here, that is a lot of momentum now for the bulls. So just trying to pick a top on this is not going to be as easy. I'm going to want to see one try for the buyers, pull back, two try for the buyers, and this is where that crown reversal comes in handy, right? If we get that good signal like that, now we roll it over, mark that trend line, find that channel, and we grab that short off of that channel. Again, notice how I draw it backwards off those lows, right? And then hit them off that high. Or maybe we simply pop up, we pull back, we retest. I'm not a huge fan of that long right there because at that point, we've already retested that high. It's kind of, as we always say in the trade room, it's really tripping over dollar bills to pick up nickels and dimes, right? This is not a very high reward trade. And we really want to save our contracts, save our bullets, if you will, right? For trades, we can get a little bit bigger reward on our positions. So let some other aggressive trader be the buyer on that. And then once they get that retest, then it's the one, it's the two. Remember, lower lows, right? Buyers want to buy low. And again, you can find those hidden channels. But most important thing, though, is think about, if I was a buyer, where would my exit be? Where would my pain be? That's the way I describe it in our trade room, right? Where would their pain be? Where do the buyers go? Uncle, 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 right? That's where you want to be selling into. And then once we get that signal, again, this is where the easy trade comes in. Find that low, find that high. And obviously, I'm simplifying this quite a bit right now for this video, right? These tend to be a little more complicated. Finding the right channel and making sure it fits well and taking that entry off of that high. But that's okay, though. Tomorrow morning, we'll do it together in our trade room. That's why our trade room exists. We can talk about this all we want here tonight, but tomorrow, when the what is hitting the fan and it's going right, it's going bonkers left and right. This is where we're having a set of rules to follow, somebody to kind of piggyback on. I've been doing this for a long time. I'm very good at keeping a cool head and watching out for these trades here tomorrow morning. So keep an eye on that, and don't forget, again, big range overhead, 94 even. Let's say we do take out that high, they hold that pullback, and they blast through that high. Yeah, no more range. Trend market, mark that high, mark that low, and grab that first test. Try to get underneath the moving average, right? Underneath prior traps. You get the point, right? So don't be afraid to trade that breakout. But again, I'm not buying this one, right? I'm not buying that first one, not in that location, right? But if they can hold that first one, the follow-up trade is a money-making trade. Very reliable, very easy to get into if you know how to draw your levels the right way, right? A pop and grind. Pop and grind would also work, right? Off the high, off the low, right? All these are breakouts and reverse I've talked about will all work as long as they can prove us one thing. They want to push it with some pretty good strength above that 92.65. All right, guys, that will do it here for tonight. Oil's ready. S&P's ready. Nasdaq's ready. Glad to see you are ready for it here with me tomorrow. Now, tomorrow morning, 8 o'clock Eastern time. I'll see you tomorrow in the trade room. There is no better place to learn and trade along. If you're missing too many winning trades or you're taking too many losses, making too many mental mistakes, our trade room is the best place to get you trading back on track and start getting you some good results out of these markets. I'll put the free course links. I'll put the trade room membership links. I'll put all that stuff in the description of this YouTube video. If you're on the website right now, it'll be right below this video tonight on the website. Don't be afraid to call the office. That's the easiest way to reach me. Just pick up the phone, give us a call. We can also use live chat. That live chat's an easy way to get my attention as well. And as always, you can drop a question in the comment section below this video. I hope by now, though, you subscribe to our YouTube channel. Hit that like button if you guys enjoyed tonight's video. And make sure you come back and see us tomorrow night if we don't see you guys tomorrow morning at the opening bell in our trade room. Good news is good news, and bad news is bad news tomorrow on the CPI. Will it be another wild one? Only time will tell. Either way, we are ready for whatever the market throws at us here for tomorrow. And that's half the battle, right? Being ready. I'll see you guys tomorrow morning, 8 o'clock Eastern time in the trade room. If not, back here, same time, same place tomorrow. My name is Joseph. Be well, be nice to each other, and you better be here tomorrow. Adios, amigos. Bye-bye for now.